Hey, it's Soleil in this episode 536 of the Orange Pill Investor. And today I want to talk a little bit about monk mode life and stack sats, never sell your Bitcoin. Um, and I am on the old computer. And I don't even know if this thing, I had to do a whole bunch of weird shit to get it to look like it was working right. If anybody can give me a thumbs up or some kind of sign that this shit works, that would be great. But um, there's a there's something that I came up with that I saw somebody talking about the other day, and it goes like this: if you delay gratification indefinitely, it becomes forfeited. So I understand that Bitcoiners have low time preference, and we can delay gratification and all of that good stuff. So that's nice. Appreciate you, Kevin. However, if you just stack sats until you die, what did you really accomplish? I know some people, it's all about enriching their bloodline forever, but your bloodline might suck in a couple of generations, right? Hopefully Bitcoin fixes that too, but usually the kids that are born a little into an environment that's a little too soft, they end up being the ones that turn out like shit. So I'm not so sure that making your grandkids and your great grandkids and your great great grandkids rich is the easy button I win scenario that we hope it is. And, so like all you one chair having motherfuckers, like eventually you're going to want to add a second chair. And it's not going to be a chair for a girlfriend. Unfortunately, I hate to break it to you, but contrary to popular belief, the price can't get high enough for some of y'all to get girlfriends. I've seen the way that you post on X, and we might get some Godzilla candles, but like girlfriend candles are not coming. So you're gonna have to hit the gym and like maybe get some practice making friends with dudes first. Maybe try that on for size. Once you can make a couple of real life male friends, then you can try hitting on women. So we got the never sell your Bitcoiners, and we've also got the people who hate spend and replace, which I think is just hilarious because the only way that you can keep enough fiat to never have to sell your Bitcoin means buying less Bitcoin in the first place. So every day that you keep some cash laying around because you don't want to you don't want to peel off a few sats for a cheeseburger is just less Bitcoin that you had that could have been appreciating. And even if it's only appreciating for 30 or 40 days, it's still a little something. So it's probably a distinction without a difference in the long run, like maybe just a few, maybe even like 1/100% difference of your total net worth. But I think philosophically, I think it just debunks the argument that there's anything wrong with spend and replace. And I'm more of a circular economy kind of guy myself anyway. Like I'm looking forward to a time in the future when everyone and everything, every entity, every corporation, every country is all on the Bitcoin standard. And if we have some kind of like leftover pinky toe appendix or something that's like a vestige of fiat, and it's instantly, your Bitcoin, when you buy something, it's instantly transacted into that country's fiat, and then it pay, you buy a Snicker bar or whatever the hell, and then that person immediately transacts the fiat back into sats on their side. Whatever. If it ends up having to be like a layer in the middle just to avoid World War III or Civil War, that's fine. It's probably, maybe that's the best we can get. But I do like the idea of a circular economy, and hopefully I'll live long enough to see that take place. That's just a quick rant for me. What's up, Voyager? Um, I was so I was having some troubles with my podcasting, and so my old laptop that was several years old probably needed to be replaced anyway. It was having a hard time rendering the virtual backgrounds and stuff that I got, so that you can't see my unmade bed or dirty laundry and shit in the background. And really kind of wanting the True North podcast to not be suffering because my tech was holding it back. And so I bought a really nice computer and had to send it back. Unfortunately, um, not for a refund. I've had it for too long, but it was freezing up on me, and it happened even a couple of times during, like, while I'm trying to frickin' broadcast live. So I busted out Old Faithful, and hopefully this will work. But it was a known issue for overheating, and I'm assuming they're going to be able to fix it, send it back to me, and then I'll be cooking with gas again. So strategy's just hanging around. Um, I know we're all expecting a parabolic move, but I don't really see why Bitcoin or strategy itself should be in any hurry. I know the liquidity is being injected, but you could argue that some of that's priced in already anyway, because like lower interest rates was always kind of assumed to be happening. I know everybody thinks, okay, quantitative tightening ended, QE is here, lower rates, more money printing, parabolic moves, Godzilla candles, Lambos, the Lambos that we didn't buy last cycle because we only got 67. Like, okay, we get Lambos this time, but there's no reason why Bitcoin can't take its sweet ass time, especially. I don't know if geopolitical events has this much control over the entire market, but they really don't need to pump this thing until the perfect timing, like right before the election. And if nothing else, Trump is a marketer. Like, he knows how to tell a story. I mean, he's the fucking you're fired guy. He's the guy that was in professional wrestling and, is a master of kayfabe, and the whole hero versus heel drama. So it wouldn't surprise me if they want to time this just right so that it pumps for a good solid 6 months before the election for midterms. Whether they really can control the dials to that level, I don't really know, but it wouldn't surprise me if Bitcoin is not big enough that it's kind of independent from that yet. So we'll see. Or that could just be the narrative that I'm telling myself, because I'm trying to chip away at this $50,000 worth of margin, and I've been unsuccessful for the last 6 months. I just keep buying dips and buying dips and buying dips, and I can't bring myself to take some profits. So the story that I need to tell myself is that I can sell some very aggressive covered calls and maybe just chip away at this usage a little bit, and then maybe go a little bit longer for the rest of 2026. One thing that I have been kind of meaning to do, and I'm just going to hurry up and do it before I forget, is I'm super bullish on Tesla, especially with Robotaxi. I mean, they're just going to start printing ungodly sums of money. But like I said, I've been really trying to hammer away at this margin use. So I've been selling very aggressive covered calls here, and then actually ending up having to buy them back for more than I spent because Tesla just keeps pumping. And I don't want to lose these shares for a number of reasons. One, I don't want them called away before I've held them for at least a year so that I can pay long-term gains. But number two, I actually like being able to vote for my Tesla shares. I haven't voted in an actual political election for at least 20 years. I gave that shit up as a bad job quite a long time ago. I voted Libertarian a couple times. I think even once. I think I even voted uh, absentee ballot while I was floating around in the Indian Ocean. That would have been in 2000. So that was fun. But um, yeah, I can't be bothered to keep up with politics anymore. And somebody that I used to follow, what was his name? General. Oh, Devin Austin. Generally, he quit Facebook before I did. It was one of the reasons that one of the guys that actually kind of inspired me to be able to do it and just get away from that fucking shitty app. I'm starting to have a little bit of the same man, same feelings about X. I kind of feel like I need to be on Noster, even though I know it's a much less pleasing user experience. I need to get in there and see if I can just start spending more of my time on platforms like that, and maybe just still continue to post the content to X for anybody who wants to keep following there. But at some point, it would be nice to just transition away from doom scrolling on these centralized apps. I know it's supposed to be the free speech platform, but it's still a centralized thing. So, um, anyway, I don't even remember what tangent I got off on there, but I kind of feel like with the money that they're going to start printing with these robo taxis, I need to have some long leverage here. I know I'm taking these short-term bets, but I feel like I need some kind of long-term. Let's go out January 2027. Now, if I go to the 990s, which would be like the Tesla 1080s, I suppose, it's going to cost me $3,000. But the beauty of Tesla, as at least from an options perspective, um, over strategy, is the bid-ask spreads are very tight. I mean, this is a $3,000 position, and the bid-ask spread is only $15. So you can easily put together a spread. So let's see if I buy the 980 and I sell the 990. It's going to cost me $70, and the max profit is the difference between these two strikes, which is $10, and everything in options is times 100. So 10 times 100 is 1,000. So I would be risking the $70 to potentially gain essentially the difference between, the 1,000 minus the 72. So I could gain $930. Let's just say something over 10x. So that's not bad. And what is the delta on this is 0.23. And since this is $10 wide, if this delta was accurate, meaning you're going to win this bet 23% of the time and you're going to lose it 77% of the time, then this position should cost under $230, and it's well under that amount. And a lot of times I try to do the reverse as well when I'm trying to figure out, okay, should I sell? I did actually do a couple of these put credit spreads. So let's just say I wanted to sell the 425, and I'm going to do easy numbers again. I'm going to make this $10 wide. Same kind of scenario here. The delta here is 0.15. That means I should be getting paid at least $150 in order to at least make this make mathematical sense as far as the Keller criterion is concerned. That's not like, okay, as long as this is true, this is an automatically, this automatically makes money. It's just kind of like I don't know, a gut check or whatever. little bit of a mathematical vibe check, I suppose. But if you're risking $1,000 and there's a 15% chance that you're going to win, and you're only getting paid like, instead of $150, you're only getting paid $75. It's like, wow. If this delta is accurate for wins and losses, then that would be a losing proposition. So when you're selling a spread, you would want to be getting paid more than the delta times the value of the width of the spread. And then everything in options is opposites. So in this scenario, instead of being an option seller, if I'm going to be a buyer, just as a gut check, I'm going to say, okay. And I think because I started selling options first, I always think of it from the seller's perspective. And so if this, if I was thinking, okay, should I sell this spread, I'd have to get paid more than $230. So there's no way in hell that I would sell the 980, 990 put spread. That would be kind of ridiculous in my opinion. And so if I don't want to sell it, then maybe the opposite is true, and then it's a good buy. And so I'm going to apply that same logic here, that I'm going to assume that the delta is correct, which it absolutely may not be. This is just the platform spitting out a bunch of numbers that it thinks is going to be true, and it's just all it's just all fucking coin flip shit. But just as kind of a go by, if this spread is cheaper than $230, it could be a bargain. It's not guaranteed to be, but if this was costing me $500, right? That would mean I'm paying $500 to potentially win 500. That's literally just coin flip behavior. So why would I pay that much money for something that's so freaking out of the money? That doesn't make any sense. So it's not like absolute science. This is not Bill Nye the Science Guy. Absolute, bank on it or whatever. But this is a hell of a lot cheaper also than shelling out $3,000. And the bid-ask spreads are pretty legit. So I'm gonna do maybe 5 of these. That's only shelling out $300 to potentially, 10x this thing. And even that is like, there's no way I would 10x this thing, because let's just say that it does hit. And I'm probably going to have to pay a little bit more for these. Just to satisfy both legs of this spread. But let's just say this does hit and Robotaxis pumps us to 750. Well, if that happens in the next month or two, these will be winning, but it's not going to be the 10x version. Maybe it's 2x, or maybe it's 50% profit or something. And I would probably ladder those profits. I would sell 1 or 2 of them for a 2 to 3x profit. And then I've got 3 left. Okay, now I sell the third one. If I'm still getting lucky, okay, I sell the third one for 5x profit. At that point, I'm to the good no matter what. And if I want to hold the last 1 or 2 to see if these go in the money and I can get a 10x on, one position, that's something that I would be more likely to do. Whoops. I did not mean to do that. That would be something that I would be more likely to do than say, okay, yeah, I'm definitely hodling this damn thing for 389 days and wait to see if I'm in the money or not. That's very unlikely. So, making a bet like this is not saying I predict that on January 15th, 2027, the price of Tesla will be higher than 990 at expiration. I'm saying at some point we may get some kind of pump that allows me to dump this and, close for a profit and maybe hold on to some position by then. And if we bounce off 500 and go down to, 450, 425 or something, then maybe I'll even dollar cost average into these and add a few positions. This is probably going to add precious few delta to my position. Where are they? Here we go. Let me group debit. Let's do call debit. So this is like a net 2 delta, right? This is not an insane position that I've taken here, right? This is like adding 2 shares. Now the beauty is that this delta will increase as the price of Tesla increases. So I'm paying whatever, $300 for 2 delta. And even just saying it that way, I hope illustrates how leverage works. Because if I wanted 2 delta buying shares, I'd have to spend $900. But I just got 2 delta of exposure and I only spent $300. Of course, shares never expire, so I could just go into a coma and wake up 10 years from now and maybe a couple of 10-to-1 splits later, maybe I'd be rich. But I'm putting myself on the clock here. So I'm not saying that the capital efficiency and getting 2 delta for whatever, 60% of the price is automatically better. Everything's a trade-off. So I'm exposing myself to some leverage, but I'm also basically making myself a slave to the clock and saying, at some point this has to hit between, and really not even between now and January. I would say it has to hit before October, because once we start to get within 90 days of expiration, I start to get a little squeamish. However, if it does hit, I really should have gone out another expiration date, because in order to close this with long-term capital gains, I need to hold it for 365 days, which would put me only 24 days to expiration here. So that was unfortunate planning. I kind of painted myself into a corner there. I probably should have, well, let's see what the Junes would have cost me. This would have given me an extra 6 months to play with, and actually only cost me an extra $15. So yeah, I probably should have done this one, and I'll just keep that in mind. Instead of dollar cost averaging into those ones that I just bought, I'll add a few of these positions. Not that much more expensive, but you get an extra 6 months of time to be right here. What's up, Buffalo? All right, so that at least just makes me feel better that I'm not like 100% capping my upside here. I'm kind of annoyed with myself that how bullish I am, that I've painted myself into a corner with this margin that I feel so desperate to sell near at the money. All right, I think I got, oh no, this is at least finally going in the right direction. So I sold these Cypher puts at the 15 strike. What was Cypher on Friday? I think it was below 15, wasn't it? Is this coming back to life? Is Bitcoin pumping? I don't even know. Not really. I mean, it's not sucking, but it's not. I guess it is up a bit. Yeah, 5% or something. All right. So that makes sense. Cypher's coming back to life a little bit. And so these cash secured puts that I sold for 140 are finally, they're not quite like there, but let's just see what would happen if I try to roll the expirations. Yeah. Unfortunately, this is the week where the 45-day expirations don't populate when you can get them at 45. So they will populate the February, is it going to be 6th? It said January has 31 days. So that's going to be like February 5th or something, 5th or 6th, something like that. They will populate, yeah, it's going to be the 6th, because it's going to be the 6th, 13th, 20th. They will end up populate these 2 missing weeks. They'll populate February 6th, probably like by Thursday this week. So we'll actually never be able to hit 45 this week, which is kind of annoying. And even when they do populate it, it doesn't have the liquidity as the monthlies do and the other weeklies that have been around longer. So I find that a little bit hard to trade to sometimes. So what I will probably do is just let these cook for another week, and then this 60-day expiration, the February monthly, in a week will be down to, oh no, it's only going to be down to 53 days. Damn, that kind of sucks. So maybe by then, February 14th will be available. Yeah, we'll see. We'll see how liquid those are. But anyway, yeah, so the annoying part is I can either only roll out from 25 to 39, which is fine. That would be 2 weeks, or I have to go all the way to 60 days, which is a little bit, it's not the end of the world, but it's a little farther than I prefer. So I could roll these out, collect a 30-cent credit per contract. But I'm in no hurry, really. Once this is below 70, then there's less than half of the position left. That I might be a little bit more, later in the week. If Cypher continues to pump to 18 or 19, then it might make more sense, because there's not going to be as much extrinsic value to collect here. Getting wrecked on the 45 strikes. I'm kind of guessing that will continue, but I don't know what's going to happen when we tap 500. Do we bounce off and back down to 490, or do we clear 500 and start looking at price discovery? I really like, so if you're a momentum trader, I like this this chart. Tracks the 52 weeks highs. And did I filter it? Yeah. So Tesla's made the list, and I guess they've had 9 52-week highs this year, over the last 52 weeks, I mean. And we're like up 130% off of the lows. And so when this clears all-time highs, maybe we get some euphoria here. And I'll have to make some kind of, I don't know if I can tap dance and maybe stop selling the weeklies temporarily until, if it does start to run over 500, maybe I'll just lay off the covered calls for a couple of weeks to see how high it runs, and then try to capture some unlimited upside before I put the covered calls back on. All right, strategy. I sold the pretty aggressive 170s, 175s. Strategy just hanging around, so I'm just going to wait all week. And the plan is just to buy these back for little to nothing on Friday. I did get back on my 1080 bullshit. Couldn't help myself but pick up a couple of these, especially with how aggressive I've been with my covered call selling. It makes me a little nervous. Been selling some cash secured puts as well. Been holding these for 11 days, but they're basically just break even. So I will, sorry, not this one. This one, I thought I had another one. Yeah, here it is. I could roll this one potentially because it's been on for 20 days. Let's see. Again, I'm not going to be able to hit the strikes that I want or the expiration dates that I want, which is kind of annoying. Yeah, and I can't even roll very deep out of the money for a credit. So I think I'll just let those marinate a little longer as well, even though it's time wise it's getting close to wanting to roll. Maybe sometime this week I'll look for maybe Thursday if they open up a new week. I'll try to roll out to like 43 days. Same here. The poor man's covered call I've had on for a week, so this shouldn't be ready to roll, and it's not. But man, it's painful looking at this damn thing. How long have I had this open? 48 days. Makes me want to close it just so I don't have to look at it anymore. This one also 48 days. Not nearly as painful as the other one, but pretty bad. Not ready to roll. So I only added what, $300 worth of margin use there. No big deal. All right, all set. The IRA, this one, no margin allowed. So this is all straight cash homie. And let's see if there's anything ready to happen. I'm basically just treating these mining stocks as premium generation vehicles, selling very aggressive, near at the money strikes, and not really worrying about upside. With as good as the mining stocks have been, it's kind of painful to admit, but the mining stocks outperform strategy all year. So maybe I should be trying to account for a little bit more upside than I am. But I'm just not in love with any of the mining stocks. I don't care to do the research to find out if I should be or not. I'm fairly confident that for the next 10, 20 years, I really won't need anything more than strategy and Tesla to live comfortably. But in order to come up with a whole ass new cash secured put or covered call, you got to have 50 grand for Tesla or 15, 20 grand for strategy. And so while I'm building up the cash positions to be able to make a whole new increment of 100 shares, what are you going to do with an extra $1,500? Okay, cash secured put in a mining stock. It's kind of like the dry powder, I suppose. Same here. This bad boy is getting wrecked. Who knows how much this is going to cost me to roll, especially if Tesla runs. If it does, and it costs me, I don't know, 4, 5, 10 grand, then again, in order to prevent my shares from getting called away, I'll just dump all these mining stock positions if need be. Cypher, same deal. I sold the 16 and a half. This is slightly in the money. We'll see how this works. I'm not going to panic roll this like, oh my God, my shares might get called away. I literally have no love whatsoever for any of the mining stocks. It's just a trading vehicle. It's not personal. Strategy. Same. This isn't like as aggressive as the weeklies, so there is some upside here, but not ready to roll. Again, I'm back on the 1080 bullshit. And, oh, apparently I added a slightly out of the money debit spread. This was probably a Leaps. Yeah, this technically would have been Leaps territory when I bought it 10 days ago. Forgot I had even bought that. And more poor man's covered call stuff, which is, oh, that's right. I just kind of like rebooted my poor man's covered calls. I think I had like 10 losing poor man's covered calls that I had been leveraging into as the price tanked last year, but closing all 10 of them, I was only able to really have enough cash to buy one more back out to 365. My spending account, this one's a little freaky. At some point I discovered that Tasty Trade doesn't really count the buying power against me when I'm selling cash secured puts. So I was able to open these positions, and it didn't drop my buying power. I think it actually went up, because not only did it not count the cash security put against me, but it increased my buying power by the premium I got paid. So that was wild. And so I opened these positions, and it looked like I had buying power, which clearly I didn't. But I figured, okay, screw it. If you're going to let me double spend, then I'll buy some Stretch or SATA. And I decided to go ahead and grab the SATA, since it seemed to be a little bit more underpriced even than Stretch. Oh, okay, so Stretch is pumped to 99. That's good. I think Stretch was at 97 when I was looking at it. So that's already pumped 2%, $2 a share. SATA is also pumped $2 a share as well. So we'll see how that works out. I forget when they pay dividends. Maybe, okay, so maybe I hold on for another 10 days. I'll even get paid some dividends on this. I kind of don't want drip activated on this, because I don't want to get paid 1% of 2 grand, $20, and then they're going to buy like 0.2 shares of, the last time I had fractional shares of fucking Misty when I was trading against Yield Max, I actually had to contact customer support to sell my fractional shares. It wouldn't let me dump my fractional shares on the exchange by myself. So that was annoying. And I would assume that I still have drip set to active. Maybe I can find that setting somewhere. But again, this is not quite ready to roll. Even these that have 25 days left, I'd probably barely be able to roll for. Actually, these are freaking in the money, unfortunately. So I will have to roll these eventually, so that I don't end up getting charged the buying power and take possession of the shares. I'm going to try to avoid taking possession of these shares at all costs, because I want to continue to be able to double spend the buying power. Pretty similar situation here. Let's see, iron, 4 days left. Getting wrecked on these covered calls. Tesla's been on for 3 days, getting slightly wrecked. Nothing terrible. But same situation. Well, that's a covered call. Yeah. So all the cipher stuff down here, I kept selling cash secured puts and it wasn't counting the buying power against me. So I'm like, well, screw it. I'll just buy a bunch of SATA. So I got like 50 shares of SATA here, which is up $1. So that's nice. And as far as I can tell, if I do have to pay $1,000 or so to roll my Tesla covered calls, I could probably peel off some SATA for that as well. Same, aggressively selling covered calls to generate cash. Bought a couple 1080s because I can't help myself. I have to call the 1-800 addiction line at some point. Same, not ready to roll. And then the cipher stuff. Whoops. 25 days is like getting pretty close. But since this went so far against me, let me see how much extrinsic value is left here. So 1675. The strikes is 18. The difference is $1.25. So if I subtract $1.25 here, that leaves $1.25. So there's still $1.25 of extrinsic value left here that I can collect. That $1.25 is a little more than half of the original extrinsic value. So you could make an argument that this is ready to roll, but it's going to be very hard to do so and collect a credit unless I go out to 60 days. And I would have to be rolling like to an in the money strike, which isn't unappealing as well. So no rush. I am not worried about someone exercising this on me early. The only time I've ever been exercised on more than like 2 days before expiration was on Strive. And that was like, it was trading below $1 and I had sold the $5 puts. So like there was no extrinsic value. The guy that exercised those did not sacrifice maybe a penny to do that. So it kind of made sense for him to just go early. It almost never makes sense to exercise early because you're wiping your ass with all the extrinsic value that's left in the option. But in that case, there just wasn't any. There was like less than 5 cents probably in there. So yeah, I can let this go another 2 weeks, easy peasy, maybe even 3, and get it down under a week before I would really feel threatened. And the fact, and even if I did get assigned the shares, it's not like the end of the world. I'm not going to cry myself to sleep or anything. So yeah, I think it's just a whole lot of nothing today. Just checking. Actually here, I think I did get assigned. Yeah, so I got assigned 100 shares of Cipher. Okay, so Buffalo is warning me that the markets are closed Thursday, which makes sense. Oh, and they close early Wednesday. That's a good call. Well, so Friday, it just means I don't have to stream. Mining stocks are all switching to AI. Yeah, and that's why I started. Thanks, Eric. That's why I started switching over to Cipher and Iron. The people that I talk to that are informed about mining stocks really like those as AI plays. And I think that's why some of those have done better than some of the other pure mining stock plays. And the premiums are pretty legit. So yeah, so I got assigned 100 shares. I don't have a covered call against it. So anytime I own shares, I immediately turn around and sell covered calls. Looks like this actually couldn't have gone any better because I probably sold the 1650s and got paid 41 cents, which makes my average cost. Robinhood does calculate this as your true cost basis when you were assigned. Tasty Trade, I don't think does. Do I own any shares? Yeah. I think I just bought them straight up when the price was 48. Regardless, so it dipped below 1650 on Friday at close. What was Friday? The 19th? Yeah. So I got assigned, and then the market decided to do me a solid, assigned me the shares at 16 or 1650, and then decided to pump back over my purchase price. So that was very kind of the market gods to do. And that's going to allow me to sell above my cost basis so that I'm guaranteed not to take a loss. And also, I can sell pretty aggressively and just capture some more premium here. Completely, if I wanted to capture more upside, a lot of times I try to at least build in 10% callaway value. So 10% of 16 would be $1.60. Add $1.60 to the current price. That gets me, what, 18.50. And if I sell the 18 or the 18.50, even the 18.50 would give me 1% return on capital for a week, plus almost $2 of callaway value. The 18 strike would give me, what, 1.5% return on capital guaranteed, plus $1.32, $1.33 of callaway value. But I'm just being very greedy here. And just kind of being a premium whore. Everything is a trade-off. Wow, they really don't even want to fill me at 51. None of you 50 centers want to come up 1 penny. You won't meet me. I've already come down more than halfway, haven't I? Oh, now the bid is down. It's funny. All right, so let's just try it at 48. This should fill. Yeah. They know how to squeeze a couple of pennies out of me. All right, let's see here. Yeah, so I have 3,400 in cash. 3,250 of that is already in options collateral, so I basically have no buying power. Like what, 175 bucks? I could do another Tesla call debit spread. I could afford that. Do I have one? I got a put credit spread, but I don't have a call debit spread. We'll leave it alone. All right. Looks like the only thing that I ended up having to do was, oh, you know what? I do have 175 plus I could sell these 4 SATA shares. That would give me another 360. Put that with the 175. That would give me to 500. So I could do that and then sell a $5 wide credit spread. Maybe I'll just hold tight for now. That would lock me up with just like no dry powder. And at that point, I might not even have enough money to roll my positions without having to sell something. So I'll stand pat. I'm not going to get too overzealous with that. All right. Appreciate everybody for tuning in. We are all caught up. Be good, Joe.